Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 21st, 2026, and we're diving into the latest earnings report from Knight-Swift, one of North America's largest freight transportation companies. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Knight-Swift's Q4 2025 earnings report provides a comprehensive look at their financial performance and strategic direction, and I'm excited to break it down with you.
Revenue and profitability overview. Let's start with the top line. Knight-Swift reported a total revenue of $1.9 billion for Q4 2025, which is a slight decrease from the previous year. They also reported a net loss of $6.8 million. John, can you elaborate on these figures?
Absolutely. The revenue decline of 0.4% year over year is relatively modest, but the net loss is significant, primarily due to $52.9 million in non-cash impairment charges. These charges were related to the integration of the Abilene truckload brand into their Swift business, which impacted their GAAP results. However, on an adjusted basis, they reported an EPS of 31 cents, which fell short of the 36 cents forecasted by analysts.
Segment performance analysis. John, let's delve into the segment performance. How did Knight-Swift's various segments fare in this quarter?
The truckload segment saw a 2.4% decline in revenue, largely due to a decrease in loaded miles. However, the LTL segment performed well, with a 7% increase in revenue, driven by higher shipments per day and revenue per hundredweight. The logistics segment faced challenges with a 4.8% revenue decline, impacted by a tightening spot market. Interestingly, the intermodal segment showed sequential improvement in load count by 2.6%, although it still faced year-over-year challenges.
Operational efficiencies and future outlook. Despite the challenges, Knight-Swift has been focusing on operational efficiencies. Can you tell us more about their operating ratios and future outlook?
Sure, the company's operating ratio was 98.6%, but on an adjusted basis it was 94.0%, indicating some margin expansion efforts. They generated a strong free cash flow of $763.2 million, which is a positive sign. Looking ahead, Knight-Swift has provided an EPS guidance of 28 to 32 cents for Q1 2026, reflecting a cautious but stable outlook given the current market conditions.
CEO insights and strategic initiatives. Adam Miller, the CEO of Knight-Swift, shared some insights in the report. What are the key strategic initiatives and market conditions he highlighted?
Adam Miller emphasized the importance of cost control and delivering quality service. He noted that while the truckload market demand was stable, the lack of a typical seasonal lift impacted volumes. The company is focusing on tech-enabled efficiencies to cut costs and improve their cost structure, which should position them well as market conditions recover.